Welcome to the Mint Report, our wrap-up of the day's business news. Here are the top stories. Wholesale inflation eases in January. Tata Motors earnings beat estimates. And markets rise with the Sensex touching a 6-month high. First up, there's finally a glimmer of hope for India's struggling economy. Inflation has eased to its lowest in more than 2 years. The wholesale price index rose 6.55% in January. In December, it stood at 7.47%. Finance Minister Pranab Mukherjee said he was now confident inflation would drop to around 6% by March end. But not everyone is so confident inflation will ease. Some economists have argued that the low figure is largely because of the base effect, since inflation stood at 9.46% last January. Others point out seasonal factors have cut food inflation in December and January, bringing down overall inflation as well. Moving to earnings, at least one major auto firm has raced past expectations in its third-quarter earnings. Tata Motors may have seen domestic sales slow down, but has posted robust numbers thanks to its overseas operations, Jaguar Land Rover. Profits rose 40.5% to 3,406 crores, and net sales went ahead 44% to 45,260. Chinese demand for Jaguar Land Rover products has been vital in pushing up Tata Motors sales upwards. Revenue from JLR rose 41% to £3.75 billion. Meanwhile, shares of the firm closed 3.74% higher on the BSE to 268. And finally, Indian markets rose once again on Tuesday, with the Sensex closing at a 6-month high. But some of those gains were helped along by short covering in late trade. The Sensex rose 76 points to 17,849, and the Nifty climbed 28 to 5,418. Other auto stocks took their cue from Tata Motors. India's top car company, Maruti Suzuki, jumped up 3.24% to 1,265, and Mahindra & Mahindra accelerated ahead 1.93% to 717. Other shares rose and fell for more specific reasons. Larsen & Toubro rose 3.87% after a bout of short covering, but drug firm Cipla plunged 6.28% to 321 rupees after posting disappointing earnings. And that's all we have for you. Thank you for watching.